Hello everyone. Spend management is one of the integral part of the CFO's KRA, and this became far more critical during the pandemic or in the last 15 to 16 months. CFOs have no other option but to control costs, count every single penny, and stop the unnecessary spending. Most of the CFOs have adopted aggressive scenario planning, zero budget to manage the cost, and much more. At the same time, the adoption of technology or digital has been at the forefront, which is also helping them to increase the efficiency. Here today at the Economic Times Phoenix CXO Virtual Summit on Human Capital, we are going to explore CFO's proactive strategies for spend management in 2021 and beyond. And let me introduce you to the best minds from India Inc. that we have with us today. So, ladies and gentlemen, my first speaker for this particular session is Mr. Yash Arora, the CFO of Adani Gas. Mr. Arora, glad to have you. My next speaker is Mr. Jayaprakash Kalappan, CFO and Company Secretary, Panasonic. Mr. Kalappan, glad to have you.
Thank you. Thank you.
My next speaker is Mr. Sugata, the CFO and the Country Finance Partner, Greater India, Schneider District. Mr. Sircar, glad to have you.
Thank you very much.
So to begin with, I will come to you, Mr. Sircar, and we are going to discuss here the spend management, which is actually a very, very critical part for every CFO. And I will put this question to all of you. But to begin with, Mr. Sircar, the first question is, what kinds of strategies have you adopted for managing your spend or spend management, at current level?
Yeah, so thank you, Amol, and very happy to be here as always. So, when we think about spend or when we think about cost, we basically like to understand what is the activity underlying. So increasingly, we have been trying to analyze the activity which is underlying that cost. So to give you an example, if you are looking at, let us say, travel costs, then you can get all kinds of data which will show the travel that different people have undertaken, their cost of travel, etc. But with that kind of data, you can only compare with different periods and see whether the trend is going up, down, compare against budget, etc. But what is more meaningful to do is, for instance, to see if you approach it, let us say, from the customer facing time. So if you have salespeople facing customers and you have data to say how much customer facing time they have, and out of that, how much is digitally done remotely and how much is being done physically, and then you compare that data across regions, across sales teams, and see what kind of sales are being generated by different teams and salespeople who are digitally and physically engaging, you might get a very interesting data trend to see how much travel is really required or really effective, if you know what I mean. So this is the way that we like to approach it. We like to approach it by activity and to see how an activity can be made most effective in terms of what it generates for us in sales and revenues or in cash.
Okay, noted, Pat, and good to begin with, Mr. Sircar, with you. I will shoot the same question to you, Mr. Arora. What kinds of strategies have you adopted for managing the spend or, the spend management at your company level?
See, IndianOil Adani Gas is a 50-50 joint venture of IndianOil and Adani Total Gas. And we are into city gas distribution. And we have lined up capex of about 15 KCR over the 5 to 8 years. So when we look at it, the spend, we look at it, what is from the strategic capex perspective, spend perspective, or the business spend perspective. When we look at, as far as strategic is concerned, that's already more or less frozen from the business perspective, approved by the promoters, board. That is the one way of looking at it. And there's a financial closure to it. And when the second component, which is the business spend is concerned, when we look at it, and there, what we look at it is to spend wisely. If each and every spend which we are having, is to look at it, we look at it more from the holistic approach, rather than each and every item we look at it. And direct cost, which is a 50 to 6% of our total revenue. And there we focus a lot. How can we bring it down? What the strategies we should adopt? What should be the sourcing? Even though there are few suppliers in the country who supplies gas to us, but we keep on looking at it, the new sources. Whether now the IGS also started, that also we are exploring. So that is the most critical, super critical item for us in terms of the keeping the cost under control. The second that we look at it is the vendors diversity and the vendor larger base. That is what we look at it. And that mitigates the risk. So in addition, what we look at it is this expenditure, what that we are going, how much the revenue is going to generate. So each spend, each rupee what is spent is linked with the revenue. Even the strategic finance also, strategic capex also that we look at it, there also what are the revenues we are having going forward. That's the way approach which we have it.
Okay, I think noted your points, and linking with revenue is one of the interesting points, and many top notch are actually following that in the industry. Mr. Kalappan, I will come to you and would like to take your opening comments on the same question, which is about how are you, managing what are the strategies that you have adopted for managing spend and the overall spend management?
Actually, we are into the FMCG products. We are into the manufacture of the kitchen appliances. We are dealing with the three main products like rice cooker, mixer grinder, and wet grinder. You see that during this pandemic, actually, you see that pandemic, though it is more target on us, but we take this as an opportunity to manage our cash flow. The thing is that during this period, we reviewed our low margin products and the no margin models. We reviewed that and we discontinued those products, which yield the more controlling our fixed cost, as well as we do the controlling our inventory. So where we can spend that much the money to the other expenses. Also, we do that. We are getting the cheapest, or we were getting the funding from the cheapest cost from our bank. So which reduce our cost very effectively. Also, we have made some alternative bank facilities, like we went to the what we call the vendor finance, channel finance, as well as we went for the PCFC loan, PCRE loan. There we have multiple choice we had, including the factoring and bill discounting, which help us to the spending the money at the right direction at the right time. So also we do the many things like that. The compliances during this period, we made all the compliances during the period, which help us to the non-compliances to as well as the making the cash flow very effective. Then we have done this the cash flow statement on the forecast on very regular interval instead of the monthly. We have done this our cash flow and forecast on a weekly basis, which we come to know that where we are into the situation and how we can spend our money. The further one is that we have get some credit terms extension from our suppliers. So which help us to the our cash flow as well as the outflow of the payments will be help us to the spending the money on the good direction. So these are the some strategy we made during this pandemic.
Okay.
Amol, can I add something to what was said?
Sure. Please go ahead, Mr. Sircar.
Yeah. So this is to what something to what Mr. Arora said. He was talking about strategic spending, strategic expenditure plans. So now when we look at strategic expenditure, let us say over the next 3 to 5 years, we need to figure out what are the activities where we want to invest. Now, the traditional invest of increasing capacity, capital expenditure is one, but most significantly, we try to figure out what we want to invest, let us say, in launching new products, or let us say in transforming some of the processes towards more sustainability, or going more digital, either through products or through processes. And the fund for these investments should be generated from the efficiencies that we generate over the same period of 3 to 5 years. So this kind of thinking is getting very, very focused and clearer in making our plans over the next 3 to 5 years, because there are opportunities of A, to invest, and also B, to generate efficiencies by doing things slightly different. I just wanted to add that.
Okay, I think it's a valid point, Mr. Sircar, and I think sustainability or green or specifically sustainability finance considering the climate change, that's a big topic in itself. We will actually need a day to discuss all those things, and that is a very essential and a crucial topic. Thank you for adding that, Mr. Sircar. So let me go ahead with few more thoughts here on the question. So Mr. Arora, let me come back to you and let me drill you more on the spend management in terms of how are you actually managing your cost in terms of you have a lot of, I mean, one is you have to maintain the strong supply chain, you have to deal with a lot of vendors, you have to deal with a lot of other suppliers and everything. Considering all these challenges, and at one side there was a pandemic where the people were not available. So how are you actually managing your spend, what you can say, and controlling the cost as well?
We have adopted a lot of RPA processes. So as a result, whether we work from office, whether we work from any location in the country or even though in the world, it is a material. Even though pandemic has given the challenges and also given the opportunities also. Even during the pandemic period, we utilized that period to go into the tender processes. We launched tender processes for the full year itself, so that those are already in place. Even when the business was not, we were not doing anything else, we started doing that activity. So as a result, and also we used that period to write the SOPs, processes. That was the period, the pandemic period had been utilized in that way. So that has helped us a lot in tiding over the situations. And today we are in a much better position to pay. And since we have a large strategic spend which is there, which is lined up over the 5 to 8 years, which is helping us. And also any spend which is more than 20 lakh rupees, that is compulsory, has to go to the tender process. That is an online platform. That is what we have done it the last 2 years. So as a result, and that has led to vendor base, that has led to far better price discovery. Even in some of the cases, we have got the price discovery in terms of 20%, 30% price reductions. Even in some cases, we were also surprised to that extent the vendors have come down in terms of pricing. So it's a very, very significant, and the base of we were able to achieve it during the pandemic period, the lockdown period. It will help us to do better when the country went to the unlocking era.
Okay, noted your points, and let me shift your focus specifically on the technology front, and let me bring you here, Mr. Sircar. I would like you to bring, give us some comments on technology and digitalization. So, how's technology or digitalization helping you, or streamlining the spend management?
There's several ways. I mean, one way is, of course, there are certain applications which we use for approval of expenditure, and these have become very, very seamless. We were doing it in ERP earlier, but then we are using certain tools which help in approval of expenditure without going through a number of levels. So with these tools, we're able to delegate further because the trail is very clearly available. The data and analysis on it is very clearly available. So one is the tool which itself helps in managing the approval process of the expenditure against the budget, etc. But also what we're using a lot is the dashboarding or the visualization of the data. So the visualization of the spend data, for instance, when we are talking about procurement or vendors, now it is not enough to see, when comparing vendors of the same kind of inputs, it is not enough to see how the prices and the pay terms compare, but you also have to see how has been the delivery experience, how has been the quality experience, and especially in this kind of times of stress, which are the vendors which have been able to continue in a consistent manner even when there was scarcity of certain inputs. So for this, you need some nice visualization of data which throws up these analysis so that you can start understanding which are the vendors which are more valuable to you. To give an example, similarly, if we are let us say looking at what we spend on marketing, and we spend on marketing in different ways, like any company, you spend on certain events, you spend on promotions in different ways, you actually spend on certain tools that you use. But there is data now, there are tools by which we are able to see for an event, for instance, what are the leads were generated and what happened to those leads, how many of them went through a funnel where it got first connected to certain people in the company, then they would have tried to influence those prospective customers, and how many of them finally got converted into orders and sales. So it's the funnel of the lead. So we have you can have data visualization for that as well. So I'll give you an example from the sourcing side and from the selling side as well, where we spend money to understand how. So this is and there are various ways you can use data in terms. First level is to visualize and get some basic level analysis, and the next level would be to use smart forecasting to see that if this has been the trend, what would be the trend in the cost. And it's very important for things like commodities which you might want to hedge.
Okay, I think.
Yeah, I would like to add here one more point.
Yeah, sure.
See, many of the suppliers who are into the commodity business, and digital platform has given them the opportunity to match selling price and the cost. Say somebody in the world, the country, is fixing up the price on the sale, and the same time they have a digital platform that they are getting the band at what price they need to buy the raw materials. So as a result, if you look at it during the last 18 months, 24 months, the profitability of the businesses which are into the commodity, and whosoever has adopted the digitalization, their profitability, their margins have improved because of aligning the cost and the revenues. And there are many areas.
I think meaningful one, Mr. Arora. Mr. Kalappan, you also heard Mr. Arora's submission to what Mr. Sircar said, and we are talking about the benefits of technology and digitalization for the CFOs. Could you give us some case study or some examples in terms of how is actually digitalization and technology or the adoption of advanced technologies helping you at your company in terms of managing costs, improving efficiency?
See, actually, we adopted many technologies in our company during this pandemic or period of pandemic. So some technology which help us to know the customer aging, because we are into the retail business. We have about 400 plus distributors and dealers. So we have, as I told you, we have multiple three main products and different models. Our SKU itself about 400 plus, because we have different colors, different size, different models, everything we have. So on the credit terms and the other the order terms also different from one customer to another customers. So in the case, what we have done is that we have introduced many artificial intelligence as well as the technology, which help us to our customer and even for our management also to know where our products are lying there. The main thing is that we also introduced that the barcode system where our products are traveling. So that help us to further feature any warranty claim or anything misplaced of the product, everything. That also during this period, sometimes because our factory is Chennai, we have 9 branches or sales branches pan India. So suppose we are sending our product from Chennai to Delhi, we can track it our product based on our the scanning system, and that help us to the whether there was any missing or whether reachable to the particular distributor or dealers on time. So this helps us to more than the like e-way bill, more than that we also able to track it for the feature warranty as well as for the other things also. Similarly, we also introduced something called in the treasury management. We have adopted some technology which help us to the linking our books and the bank for the BRS, and whether we can whether any wrong debit or credit has been charged on the bank side, all the things we can track it. So this has helped us to the our management as well as corporate for the very large manner for this purpose of this technology and the other things.
Okay, so basically tracking everything through digitally, I think that becomes more important for you. Okay, so gentlemen, I have 2 very important questions, and before time gets over or something like that, I will ask this question to all of you. And the question is specifically about the current situation and the future. So first question I will start with you, Mr. Arora, is just that I do understand the spend management, controlling the cost is very important right now. But will you continue to control the costs, or you will also open up, a bit and think about the capex investments going ahead? And I want, Mr. Arora to, take this first question.
Controlling the spend, I think it's a continuous process, right? It can't be stopped. And I think that with the new technologies that were coming up, and I think the costs are expected to go down further. And I think the greatest challenge which we are having is in terms of the spend management, that's the data security. That is what we're working on. Even that also, if you look at the data security cost, or say we are going in for the cyber data storage. From that perspective, those costs are, say, every year those are coming down. And as and when we are spending more, we are going in for the more vendor base. So I think these costs are expected to come down only. As far as the most critical part will be the manpower cost. As material cost is far more easier to control, or say that's easier to have an access with the commodity cycle and otherwise. I think the most critical aspect of the cost is the manpower cost, right? Which can't be cut in upfront. It can be, I think the best way is to upskill them so that they are the people who are able to take up the new challenges and the new environment rather than bringing down the cost. And that is the way forward today. And the people that we need in the going to come, the people who are business savvy as well as the tech savvy. Earlier, those people were called the purple people also in the many countries. I think that kind of the quality of the skill sets that we needed and going forward, and improvement in the efficiency levels will bring down the cost further.
Okay.
Efficiency today is the biggest employer. Once that gets minimized, I think the scale will also come down. The cost will come down.
Right. So thanks, Mr. Arora. So Mr. Sircar, you heard, Mr. Arora talking about, he will manage the continuous process, but the cost will come down with the help of technology. How do you see it? Do you see that the spend management or the stringent monitoring of spend management will continue even after 2021 or beyond 2021? Are there any other changes that you see here?
I think if I understand you right, I think what you possibly feel is that the pressure that we have felt over the last 18 months has made us look at costs more acutely, and will that continue? Well, I think what has happened, at least I can say for us, is that while with the first few months of the pandemic, we were in a crisis situation, we tried to cut costs, increase of cash. But over the last 1 year, it has made us rethink as to what are our activities, what are the really useful ways to spend our money when we do our strategy for the next 3 to 5 years. So to answer your question, once we do a better strategy of our cost and efficiency, then the day-to-day controlling of costs should not be so much of a requirement, at least from the CFO's desk. Having said that, there are multiple opportunities to generate efficiency, and you can see actually India Incorporated really generating that. If you see the results, companies have become cost efficient. So there are several ways of generating cost efficiency, and one of it is of course enabled by technology. A large part of it is enabled by technology actually, because you can change processes, you can look at options. Analysis and data tells you a number of things with which you can act. So I expect that as we take those strategic decisions on investing in technology, and B, taking some actions which the analysis and analytics are showing us, we should not have to spend so much time on day-to-day management of costs. We should be able to more focus on what we are investing and what it is yielding for us. So, the classical cost to serve kind of concept. So what is our cost to serve? If you talk about, Mr. Arora talked about human resources. So human resources, where do we deploy them? And where are they yielding mostly the benefit? If you are talking about the indirect costs, including the human resources indirect costs, people like us who do not go out and sell, what is the right balance between people like us and people who are actually out in the field and selling. So these are more strategic structures that we are trying to put in place so that the day-to-day management of costs after that becomes consequential.
Okay, noted your points. Mr. Kalappan, I will tweak the same question. One is obviously the same, whether will you continue to monitor the spend management going ahead beyond 2021, but also since you mentioned a lot of technology sometime back and continuously investing in technology, tell me, how is data helping you? How is data actually trying to, how are you managing data in terms of, managing your finances seamlessly?
Amol, I see that I have to take one word. It's a dictator, DIKDER. See, dictator nothing but how the data is converting to the result. So D for data, I for information, K for knowledge, DE for decision, and R for result. So the data, how it transforming to result is, so data has to be converted to the information, then information to the knowledge. From the knowledge, we will take the decision making, and from decision making, the result is coming. So this is the expansionary dictator. So the data, especially in the finance side, so it is a it is uncooked data, uncooked information, which has to be converted to the result with the different process. So as a CFO, how we are using this data into the finance process, it helps us to many lot in the different areas. So also we have to see that FE&S and FEX. So these are the things to be how the data should be cross department can be used, and how that can be made as a useful manner. So nowadays we see that the CFOs are gradually taking the role of the chief value officer. Instead of taking the chief financial officer, they are chief value officer, because they become the pivotal role in the data-based business strategy and drivers for the corporate added value. So it is more like they are converting the data into the result with the help of the technology and other model. So these are the helpful for this entire corporate as well as for the CFO role.
Okay, noted your point, Mr. Kalappan, on that note, and I think one again important question, though you partly mentioned about spend management in 2021 and how are you actually dealing with it even after 16 months. But now again, my one important question to all of you, and let me put it in this way, that there are a lot of challenges and there are a lot of changes, specifically in the supply chain. Employees are working from home, there is aggressive digital adoption, the market of change as well. There are new kinds of vendors and the partnerships with the e-commerce companies. Considering all these backgrounds, how do you see spend management and overall the cost structure going ahead, not in this particular year, but going ahead, maybe next 2 to 3 years? And I will start this question with you only, Mr. Kalappan.
See, based on this current present situation, including either pandemic or non-pandemic, even if you see that pandemic side, the wave 2 is though more effective, but people is what you can say, people is ready to accept it as compared to the wave 1. So in that case, what are the cost involving, including the anything, even the cost up is going up everywhere. Moving forward, as Mr. Arora told, that there will be some reduction in the cost in the future because of the technology growing up. Technology will take the people efforts, and as well as they will take the technology based on that information as well as the work task. So this will help us to the reduction in the cost in the future significantly.
So, you talked about a few things. You talked about supply chain and you talked about work from home. So let me take these two pieces. In supply chain, what is happening is there is a whole new look, which is approach, which is coming into being for supply chain, where the strategy is now to ensure that you build flexibility in the supply chain. While your primary supply chain should remain short, which means you are close to markets, you must also have redundancy built in how you produce or where you produce, as well as redundancy built with your vendors, which are multiple sources for your critical inputs. And therefore, the inventory management approach is also changing. It is becoming more complex and dynamic. It is not enough just to say that you have a low and optimal inventory. It is a dynamic inventory. So there is a lot of data and analysis which is being used for this, as is being used for optimizing the supply chain in terms of the logistics chain, and this will no doubt bring efficiency. As you know, the logistics costs in this country are high, and I think it will only keep going down as a percentage of sales. Secondly is what has work from home taught us is that the digital adaptation has become faster. In our case, for instance, there were already a number of digital assets which were available to the sales and marketing teams to sell. The remote, we could do a virtual factory tour, we could do an electronic acceptance testing of the equipment and all that. But the adaptation of all this from our own sales teams as well as from customers have become much better. So we see efficiency, and as you can understand, if people move less, travel less, and meet less, you generate resources in various ways. It's not only the travel cost, it's also the carbon footprint, it's everything else. So I expect efficiency to improve and people to keep looking for ways of improving efficiency with the digital adaptation. I don't believe that we're going to stay completely digital, completely remote, because I think the realization has been that a mixed model works, a hybrid model works the best. You do have to connect with your customers, you do have to connect with your stakeholders, but there is a balance which can be made with digital. So I expect this to the other thing, I think we are seeing the appetite for, and we're seeing it in our business as well, appetite of customers to acquire analytics products. So we have products which which give analysis to the customer, analytics to the customers in addition to what we sell in terms of equipment. And we see more and more appetite for buying such analytics because customers want to understand what they can do in improving their efficiency. So I see this all across. I see efficiency is improving, coming from data and analytics, coming from digital ways of doing things, and coming from a very different approach to supply chain.
I think very meaningful thoughts, Mr. Sircar, and I will come to you, Mr. Arora. I would like you to tell us, what do you see after 2 to 3 years, or up in next 2 to 3 years?
In next 2 to 3 years, this digital platform to getting advanced, what is it stands today. I think procurement, that will be more or less, it will be from the tender process to pay. So all the processes will get integrated. I think that is the biggest change I see in the next few years. Today, it will be the large corporates. In the time to come, it will be MSCME and SME also. That is one. Another biggest change I see is the corporates are looking at it, providing the holistic solutions to the customers. Today, for example, you have one piece of the one product or the two products in a supply chain or and what's the requirement of the customers. Then they will look at it, providing those, filling up those gaps, which customer is managing at its end. For example, a port company will provide the solutions to delivery to the factories. So any shipment which is coming till the factories, they will provide the complete solutions. So that is which is expected to come up. Or in case there are not large corporates, which they will do it, maybe the mid-sized corporates, they will come out with the solutions. They will give a platform. For example, like Amazon, okay, the suppliers at their digital platform. I think that is what I expect in the next few years, so that customer is getting all the products, services at one digital platform. That is the biggest change I think is expected to come with the advancement in technology.
Okay. I think I'm almost done with my time. I think the watch is ticking. But before I wrap up, let me take one quick question with all of you. Treat this as a rapid fire round type of a question, where you could, tell me quickly. We have seen many challenges actually, and spend management will continue. But, how long do you think will take you to reach back to a normal or a pre-COVID level under the current circumstances? As a CFO, what do you observe? What is your analysis going ahead? And I will start with you, Mr. Sircar.
So in terms of the environment, Amol, I don't think there will be a pre-COVID level again. But if you're talking about business levels, we have started achieving that already. As you know, we have several businesses in India, but in I would say in majority of the businesses, we are touching the 2019 levels, and we keep comparing because 2019 was the last normal year. So business levels have started reaching back. But the world is a different place, and I don't think we will go back to the pre-COVID level again in terms of how we thought, how we approached, etc. So it's all new, and we talked about all that, how digitization, etc., is going to govern, sustainability is going to govern the way we think and way we look ahead.
Noted your point, Mr. Kalappan.
If you ask these questions, my answer would be the already people are use this e-commerce and the online trading. Okay, with respect to our products. So we are already in the though it is not, we are already in the touch upon the pre-COVID level, our top line. Still, we have to achieve this. It will take 1 or 2 months to make it this one. So, as for my side, I think because already we have achieved our target. So, based on our pre-COVID thing, still we are expecting more business because the online business is going good. Because people are working from home and they don't want to come out for trading business, all the things. I think it will take few more months to come back with our normal.
And what about you, Mr. Arora? I'm sure the gas story is intact.
Yeah, it's doing very well. I think we are about 2x what it was in terms of business levels.
Right.
Expanding, that's also adding to further volumes. So as far as volumes, I think it's a robust story. That's the time to come. Yeah.
Thank you so much, gentlemen. Wish I could take some more questions with you, but I think the time is limited here. And but thank you so much for sharing your perspective, specifically on the spend management and what is the strategy ahead, and how are you actually taking the benefit of digitalization and technology. So thank you so much, Mr. Arora, Mr. Kalappan, and Mr. Sircar for sharing your perspective at this summit. Thank you so much.